Our next guest is, in fact, Adam Parker, raising the question about whether it's time to start buying the semis. Of course, Trivariate Research founder and CEO, AP. Happy Friday.
Yeah, good to see you. Everybody's looking good.
I guess first overall markets, right? For the month. Down 2 is a lot better than down 10. Yeah. You would agree?
For sure. We came in the year with this view. It sounds almost stupid to say this out loud. But in early January, when we did our year outlook, we thought the market would be down because things like tariffs and policy weren't in the price. That sounds crazy that was completely a contrarian view in early January. Now I'm dying to get bullish after having that call. But I think it's really hard, partly for what Sarah just went through, which is, one, I don't really understand the lag between the tariff and when it hits earnings. And I'm now suspecting that it isn't that immediate, and the lag could be it's more the Q2 numbers with the Q3 guidance, and I don't think the all clear is set. And two, we haven't seen a lot of companies guiding down and the stock doesn't go down. Maybe somebody said to me, well, Adam, you've been waiting for that, and Tesla did that. I'm like, no. Tesla was Musk going back to work. That wasn't people rewarding saying the bad numbers were in the price. So you need at least a combination of those two things to get me a little bit more thinking more of this is behind us than in front of us. So this rally doesn't make me more excited about risk-taking necessarily. I think it's going to be up and down here until we get more clarity on some of the things Sarah was saying about the bottom of company news.
What about pull forward? What about, how are you figuring on that? A lot of people are sort of at least asking that question. Again, back to what we can expect in the second half.
No, I agree with that. I don't know. We certainly read a lot of anecdotal stories about it. I suspect that the skew is more toward that than not. And that's what I've done so far is I took my 2026 earnings and I made my 2027 earnings. I sort of said, let's just assume 1 year of earnings growth is gone. And so then I said, okay, well, maybe that's roughly what was in the price. I mean, a lot of stocks were down 5 to 30%. So maybe that, and so in a weird way, I kind of thought the market reaction might have been kind of fair so far. And now we need to evaluate. I mean, you just asked a question on the previous segment. The answer is, of course she doesn't know what the 200 countries are and none of us know. And I think uncertainty, what we've been trained on Wall Street is uncertainty. I should pay a lower multiple for that. And so it's hard to see why I'm going to get a V-shaped fundamental recovery with higher multiples. So when I get a big snapback week, I'm not thinking I love it now at higher prices than I used to, which sometimes happens to all of us. I'm thinking I probably got.
But uncertainty can also get overdone, and I wonder, Adam, has uncertainty ever led to recession?
There's a difference between a growth scare and then an actual growth slowdown. I think in this case it is a growth slowdown. I don't know how much of it is yet, and that's where I think the challenge is. But you can't just say, oh, it's an irrational growth scare that everyone has, and it's like an uncertain. I think if you have a business with pricing power, if you have a business that you can be okay, and we've seen certain, Lilly's got a product that goes up. Google puts up decent print because they're not China exposed. Like there's things that can do it, but there's a lot of economically sensitive businesses we're going to hear from next week and the week after. If you think about how earnings season typically unfolds, where we may get guidance that isn't quite as peachy as we've seen from the original guys in the banks and then some of the higher quality tech companies that have reported so far.